Hello and welcome to this video on how to invest in stocks. Investing in stocks can be a great way to grow your wealth over time, but it can also be confusing and intimidating if you don't know where to start. In this video, I'll be walking you through the basics of how to invest in stocks and what you need to know before you get started. Step 1. Understand the basics of stocks. Before you start investing in stocks, it's important to have a basic understanding of what stocks are and how they work. Stocks, also known as equities, are a type of investment that represent ownership in a company. When you buy a stock, you are essentially buying a piece of that company. The value of your stock can increase or decrease depending on various factors, such as the financial health of the company, market conditions, and investor sentiment. Stocks are usually bought and sold on stock exchanges, such as the New York Stock Exchange or the Nasdaq. When you buy a stock, you are typically buying it from another investor who is selling their shares. The price of the stock is determined by the forces of supply and demand in the market. Investing in stocks can be a good way to earn a return on your investment over time. As the company grows and earns profits, the value of your stock may increase, allowing you to sell your shares for a higher price than you bought them for. However, stocks are also subject to market volatility and can be risky investments, especially in the short term. It's important to have a basic understanding of stocks before investing in them. This includes understanding how they work, the factors that can affect their value, and the risks involved. It's also important to do your research and choose stocks that align with your investment goals and risk tolerance. Step 2. Decide on your investment goals and risk tolerance. Before you start investing in stocks, it's important to decide on your investment goals and risk tolerance. When deciding on your investment goals and risk tolerance, it's important to consider a few key factors. First, you should think about your overall financial situation, including your income, expenses, and debts. You should also consider your time horizon for investing, as well as your personal financial goals and priorities. Risk tolerance refers to your willingness and ability to take on investment risk. Some people are comfortable taking on higher levels of risk in exchange for the potential for higher returns, while others prefer to take a more conservative approach with their investments. Your risk tolerance will depend on a variety of factors, including your age, income, and financial goals. When setting your investment goals and risk tolerance, it's important to be realistic and consider the potential risks and rewards of different investment strategies. You may want to consult with a financial advisor or do some research on different types of investments before making any decisions. It's also a good idea to diversify your portfolio by investing in a variety of stocks, bonds, and other assets to help minimize your risk. Step 3. Choose a broker. Once you've decided on your investment goals and risk tolerance, it's time to choose a broker. A broker is a firm or individual who acts as an intermediary between you and the stock market. There are many different brokers to choose from, so it's important to do your research and choose one that's right for you. Some things to consider when choosing a broker include fees, account minimums, and the types of investments they offer. Step 4. Open an account. Once you've chosen a broker, it's time to open an account. Most brokers offer several different types of accounts, including individual brokerage accounts, retirement accounts, and education savings accounts. Choose the type of account that's right for your investment goals and open it with your chosen broker. Step 5. Fund your account. Now that you've opened your account, it's time to fund it. To fund your investment account, you'll need to transfer money from your bank account or another investment account into your brokerage account. This can usually be done online through your broker's website or mobile app, or by calling their customer service department. To initiate a transfer, you'll typically need to provide your brokerage account number and routing number. Your broker may also require you to complete additional steps, such as filling out a form or providing additional identification information. It's important to note that some brokers may require a minimum initial deposit to open an account, so be sure to check the account requirements before you get started. Additionally, there may be fees associated with transferring funds, so be sure to review your broker's fee schedule and account terms carefully. Once your account is funded, you'll be able to use the funds to buy stocks, bonds, mutual funds, and other types of investments. It's important to remember that investing always carries risks, so it's important to do your research and choose your investments wisely. Step 6. Research and choose stocks. Before you start buying stocks, it's important to do your research and choose the right ones. There are many different types of stocks to choose from, including blue chip stocks, growth stocks, and value stocks. It's important to consider factors like the company's financial health, earnings history, and industry trends before you make a purchase. Step 7. Buy stocks. Once you've chosen the stocks you want to invest in, it's time to buy them. You can do this through your broker's trading platform, either online or through a mobile app. When buying stocks, it's important to consider factors like the current price, the company's earnings potential, and any potential risks. Step 8. Monitor your investments. Once you've bought your stocks, it's important to monitor them on a regular basis. Keep an eye on the company's financial health and industry trends, and consider selling your stocks if they're not performing as well as you'd like. In conclusion, investing in stocks can be a great way to grow your wealth over time, but it's important to approach it with care and attention to detail. By taking the time to understand the basics of stocks, setting clear investment goals and risk tolerance, choosing a reputable broker, and making informed decisions about which stocks to buy and sell, you can set yourself up for long-term financial success. Remember, investing in stocks is not a get-rich-quick scheme. It requires patience, discipline, and a willingness to weather the ups and downs of the stock market. However, with the right approach and a commitment to smart investing practices, you can build a diversified portfolio of stocks that will provide a solid foundation for your financial future. It's also worth noting that investing in stocks is just one part of a broader financial plan. It's important to also focus on building an emergency fund, paying off debt, and investing in other types of assets like real estate and bonds. By taking a comprehensive approach to your finances, you can ensure that you're well prepared for whatever the future may hold. So, whether you're just starting out or you're a seasoned investor looking to expand your portfolio, remember that investing in stocks can be a powerful tool for building wealth and achieving your financial goals. With a little bit of knowledge, patience, and discipline, you can become a successful stock investor and secure your financial future for years to come. Thank you for watching this video on how to invest in stocks. Remember, investing in stocks can be a great way to grow your wealth, but it's important to approach it with a long-term mindset and a well-informed strategy. Be sure to do your research, choose the right broker, and monitor your investments regularly. If you have any questions or comments about investing in stocks, feel free to leave them below. And as always, happy investing!